Every trader dreams of finding a strategy that always works. A method so precise, so repeatable, that it feels like a secret key to the market. But the truth is, the real strategy that always works isn't built on indicators, charts, or entry signals. It's built inside the trader's mind. The market doesn't care how fast your internet connection is or how advanced your tools are. It only responds to one thing: how well you handle uncertainty. Scalping magnifies this truth. In the space of seconds, your beliefs about risk, control, and outcome are exposed. You can't hide from yourself when you scalp. Every click of the mouse is a mirror reflecting your internal state. The difference between the scalper who thrives and the one who crumbles isn't the setup, it's the mindset. The profitable trader doesn't chase perfection, they embrace imperfection with discipline. They understand that consistency doesn't come from being right, it comes from being centered. Scalping is the purest test of mental alignment. It doesn't give you time to think, it only allows you to act. And your actions reveal whether you trust your process or your fears. Most traders try to outsmart the market. The masters focus on outsmarting their own impulses. Because the moment you can watch a trade move against you without emotional resistance, you've already separated yourself from 90% of the crowd. A scalping strategy that always works is not one that wins every trade. It's one that never lets your emotions hijack your edge. It's a process rooted in self-trust, executed through discipline, and refined by repetition. You learn to surrender to the rhythm of the market, not to control it. You let go of the need to be right, and instead, commit to the process that keeps you consistent. Each small win becomes a signal, not that the strategy works, but that you are working properly. Each small loss becomes a lesson, not a punishment, because when your decisions are aligned with probabilities, the outcome of any single trade becomes irrelevant. What matters is that your process stays intact, your confidence remains stable, and your discipline never wavers. The market doesn't reward intelligence. It rewards alignment. The more you align your thoughts, emotions, and actions with uncertainty, the more the market opens its door to you. Scalping simply speeds up the lesson. Your beliefs about fear, greed, and control determine your results far more than your system ever could. So when we talk about a scalping strategy that always works, understand this. It's not a formula on a chart. It's a formula in your mind. It's the unshakable belief that your edge comes not from predicting, but from executing. It's the discipline to take every valid setup without hesitation, and the courage to cut losses without regret. It's the calmness that comes from knowing you don't need to win every trade. You only need to follow your plan flawlessly. That's what always works, not because it avoids loss, but because it avoids chaos. Not because it guarantees profit, but because it guarantees consistency. Consistency is not an event, it's a process. It's not something that suddenly appears after one winning streak or a perfectly executed trade. It's something that is built decision by decision, moment by moment, trade by trade. Every time you choose discipline over impulse, patience over excitement, and clarity over chaos, you are laying one more brick in the foundation of your consistency. Most traders believe consistency comes from finding the right setup, the perfect entry, the ideal indicator, the magic formula that will make the market bend to their expectations. But that belief is what keeps them trapped. The truth is, consistency has nothing to do with the market and everything to do with you. The market doesn't owe you a pattern, a signal, or a profit. It offers only one thing: endless opportunity. What you do with that opportunity, how you respond to it, is what determines your destiny as a trader. Every single decision you make in the market either strengthens or weakens your relationship with discipline. Think about it. Each click of your mouse is not just a trade, it's a vote. You're voting for the trader. Are you voting for the version of yourself that trades with patience, objectivity, and trust in the process? Or are you voting for the version that reacts to fear, greed, and impulse? Every decision leaves a trace, and those traces eventually form the habits that define your consistency. Consistency is not the result of eliminating mistakes, it's the result of learning how to recover from them without losing your emotional balance. The best traders are not flawless, they're resilient. They don't demand perfection from themselves, they demand presence. They understand that every trade is a reflection of their state of mind, not a reflection of the market. The more they focus on their own execution instead of market noise, the more consistent their results become. You cannot control what the market does, but you can always control what you do. That's the secret. Most traders they spend all their energy analyzing price, while the real battle is happening in their own beliefs. If your decisions are driven by fear, you'll find evidence of danger everywhere. If your decisions are driven by confidence, you'll see opportunity where others see chaos. The market is neutral. It simply mirrors the beliefs you bring to it. Consistency, then, is not a skill you acquire. It's a state of mind you cultivate. It's built when you align your thoughts, emotions, and actions with the principle of probability. You start to understand that no single trade defines you. No single outcome has power over you. What matters is that over a series of trades, your behavior reflects trust in your edge. You stop obsessing over results and start focusing on execution. You stop asking, will this trade win? And start asking, did I follow my process flawlessly? That shift in focus from outcome to process is the birth of true consistency. Every decision you make in the market is an opportunity to practice that alignment. When your setup appears and you hesitate, that hesitation reveals doubt. When you enter impulsively, without confirmation, that impulsiveness reveals attachment. Each of these moments teaches you something about yourself. Most traders ignore these lessons because they're too focused on the money. But the money is only the surface. The real lesson lies beneath, in the beliefs that drive your actions. To build consistency, you must treat each decision as sacred. Every trade, no matter how small, is a test of your ability to stay centered. It's not about winning. It's about maintaining your internal balance. Because when your mind is balanced, your decisions become consistent. And when your decisions are consistent, your results eventually follow. Consistency is not glamorous. It's repetitive. It's quiet. It's built in those moments when you do the right thing even though no one is watching, even when it feels uncomfortable. It's built when you cut a loss quickly, instead of hoping it turns around. It's built when you take your profits according to plan, instead of waiting for more. It's built when you accept uncertainty, instead of trying to control it. Each of these moments may seem small, but together they create momentum. Think of a scalper. Their world moves fast, ticks, seconds, micro movements. There's no time to think, no room to debate. Their edge depends entirely on their ability to make quick, consistent decisions. Every hesitation costs them. Every moment of doubt erodes their edge. The scalper who thrives is the one who has trained their mind to trust their system completely. That trust is not blind. It's built over time, through disciplined repetition. Repetition is the forge of consistency. You can't expect to make consistent decisions if your process changes every week. The market rewards those who have the patience to refine, not reinvent. The more you repeat the same process, enter, exit, manage risk, review, the more you condition your mind to act automatically under pressure. Over time, your emotional reactions weaken because your brain learns that it doesn't need to panic, it simply needs to execute. This is why emotional control is not about suppressing feelings, it's about retraining your responses. Every time you feel fear and still follow your plan, you're rewiring your mind for discipline. Every time you feel greed and still take profits according to your target, you're strengthening self-control. Every time you feel frustration but refuse to chase losses, you're reinforcing patience. These are not just moments, they're milestones. Each one brings you closer to becoming the trader who doesn't just trade well on good days, but trades the same way on every day. That's what consistency really is. The ability to remain the same regardless of the market's mood. It's the power to stay centered, while everything around you fluctuates. The market will always test you. It will tempt you with easy setups and frighten you with sudden reversals. It will lure you into overconfidence after a winning streak and push you into hesitation after a loss. But your job is not to control the market's behavior, it's to control your response. Because the market's job is to move, your job is to decide. Every consistent trader has gone through the same evolution. At first, they chased perfection. They wanted to win every trade. They measured their progress by profits and losses. But eventually, they realized the truth. Consistency doesn't come from winning. It comes from executing without emotional distortion. They stopped trying to eliminate losing trades and started eliminating inconsistent decisions. Once you understand this, everything changes. You no longer fear losses because you know they don't break your edge. You no longer feel the need to force trades because you trust that opportunities are infinite. You no longer fight uncertainty because you've learned that uncertainty is the very condition that makes profit possible. This mindset frees you. It allows you to operate from a place of calm confidence rather than anxious control. Consistency is freedom. It frees you from emotional chaos. It frees you from the need to prove yourself. It frees you from the illusion that you can control outcomes. When you are consistent, you don't need to know what will happen next. You only need to know how you will respond. That's where true power lies. Every decision, no matter how small, is a declaration of who you are as a trader. If you treat each one with respect, if you approach each trade as a chance to practice mastery, you begin to see trading not as a game of prediction, but as a process of refinement. You stop asking, when will I be consistent? And start realizing, I become consistent every time I choose discipline over emotion. So if you want to build consistency, stop searching for it in the market. You won't find it there. The market is chaos. It was never meant to be consistent. But you can be, and that consistency will turn chaos into opportunity. Remember, you build consistency one decision at a time, one disciplined trade at a time, one act of self-trust at a time. Each moment of clarity compounds, each act of patience strengthens your edge. The question isn't whether the market will reward you, it's whether you can keep showing up with the same focus, the same discipline, and the same trust no matter what the market does. Because when you can do that, when every decision reflects stability instead of emotion, you'll finally understand the truth that few ever learn. Every trader wants to control the market. They want to predict it, time it, conquer it. They chase the feeling of certainty, the illusion that if they just analyze enough, study enough, or tweak their system enough, they'll finally unlock the secret to control. But the market cannot be controlled. It can only be experienced. It doesn't move because of you or against you. It simply moves. The more you try to control it, the more it controls you. The moment you try to make it behave according to your expectations, you've already lost your emotional freedom. The market is a mirror. It reflects every fear, every hope, every belief you bring to it. It has no agenda. It just shows you yourself. That's why two traders can look at the same chart and see two completely different realities. One sees danger, the other sees opportunity. One sees chaos, the other sees flow. The difference isn't the market. It's the mind behind the screen. You can't make the market predictable, but you can make yourself stable. You can train your mind to remain calm in uncertainty, detached from outcome, centered in process. When your internal world becomes orderly, the external chaos loses its grip. When you no longer react emotionally to every tick, the market stops having power over you. It becomes what it was always meant to be, a field of probabilities, not a battlefield of emotions. Control of the mind doesn't mean suppressing emotion. It means understanding it. Fear, greed, frustration. These emotions are natural. They're signals, not enemies. They show you where your beliefs are misaligned with reality. Fear tells you that you're attached to outcome. Greed tells you that you've lost patience. Frustration tells you that you're fighting what is. When you learn to observe these emotions instead of acting on them, you begin to separate your identity from your impulses. That's the first step toward mastery. The mind is the true battleground of trading. The charts are just the scenery. The real war isn't between bulls and bears. It's between discipline and emotion. Every time you feel the urge to move your stop loss because this one might turn around, that's emotion trying to override logic. Every time you double your position size to make back what you lost, that's fear disguising itself as confidence. Every time you ignore your rules because this setup feels right, that's attachment blinding you to probability. The market doesn't defeat traders. Their undisciplined minds do. To control the mind, you must first accept the one truth that most traders resist. You will never know what's going to happen next. Not today, not tomorrow, not ever. You can have the best analysis in the world, but you will never have certainty. The market doesn't owe you that. It operates on randomness and probability. But that uncertainty is not a curse. It's an invitation. It's the condition that allows profit to exist. If outcomes were guaranteed, there would be no risk. And without risk, there would be no opportunity. So the question isn't, how do I predict the market? The real question is, how do I remain composed when I can't predict it? The answer lies in surrender. Not the kind of surrender that gives up, but the kind that lets go. You surrender the need to control, to be right, to prove something. You let go of the illusion that the market should behave according to your expectations. When you stop demanding certainty, your mind becomes free to act in alignment with probabilities. That's where consistency begins. When you can control your mind, you stop reacting to every move. You stop chasing trades out of fear of missing out. You stop revenge trading after a loss. You stop hesitating after a win. Your actions become steady, deliberate, and aligned with your plan. You begin to see that the market is not your opponent, it's your teacher. Every fluctuation is feedback, every outcome is data. You no longer need to resist it or fight it. You simply respond to it with clarity and calmness. Imagine two traders watching the same price movement. The first one panics. His heart races, his palms sweat, his mind floods with doubt. The second one watches the same movement and does nothing. He breathes, waits, and follows his plan. The difference between them isn't their strategy. It's their state of mind. The first trader's emotions control him. The second trader controls his emotions. The first trader is at the mercy of the market. The second trader is free. Freedom is not the absence of losses. It's the absence of emotional chaos. When you no longer fear losses, they lose their emotional charge. When you no longer crave wins, you stop chasing them. When your mind becomes steady, your decisions become clean. And when your decisions are clean, your results start to reflect that clarity. Controlling the mind is a process, not a moment. It's built through repetition, through conscious awareness of your thoughts and behaviors. You start by observing how you react. You notice when fear shows up before a trade. You notice when excitement tempts you to take profits too early. You notice when frustration makes you want to force a setup. Observation is the first step toward transformation. Because once you can see your own patterns clearly, you can begin to reprogram them. Every trade gives you the opportunity to practice self-control. When you feel the urge to act emotionally, that's your training moment. Every time you resist that urge and choose discipline instead, you strengthen your mental edge. Over time, these small victories compound. You begin to trust yourself more. That trust becomes the foundation of consistency, because when you trust yourself, you don't need the market to behave. You only need to behave yourself. You see, the market has no power except the power you give it. It can't make you afraid. It can't make you greedy. It can't make you doubt yourself. All it can do is trigger the emotions that are already inside you. The real challenge is not to change the market, but to change the meaning you assign to its movements. When you can watch a candle drop and not feel threatened, you've taken your power back. When you can miss a trade and not feel regret, you've taken your power back. When you can take a loss and still feel centered, you've taken your power back. That's control, that's mastery. The trader who controls their mind doesn't need motivation, they operate from understanding. They know that emotions are part of the process, not interruptions. They use every emotional reaction as data about themselves. If fear shows up, they don't fight it. They ask, what belief is creating this fear? If greed appears, they ask, what expectation am I attached to? This inner dialogue turns emotion into insight. Over time, those insights shape emotional intelligence, the true edge that separates professionals from amateurs. Control of the mind also means accepting responsibility. You stop blaming the market, your broker, or your tools. You realize that your results are the reflection of your internal state. If you feel out of control, your trading will mirror that. If you feel stable, your trading will mirror that too. Responsibility empowers you. It reminds you that you are not a victim of the market, but a participant in its flow. This is why some traders can trade calmly through extreme volatility, while others panic over small pullbacks. The difference isn't intelligence, it's internal control. One has learned to separate their identity from outcomes, the other hasn't. When your self-worth depends on your results, the market owns your emotions. But when your self-worth depends on your discipline, the market loses its leverage over you. You no longer need to win to feel good. You need only to follow your rules. A calm mind makes better decisions. When you're emotionally charged, your perception narrows. You see only what confirms your fears or desires. But when your mind is still, you see the market as it is, not as you wish it to be. You can recognize setups objectively, act without hesitation, and accept the result without resistance. That's the essence of trading mastery. Seeing clearly, acting cleanly, accepting fully. The paradox of trading is that the more you try to control the market, the less control you have. But the more you control yourself, the more power you gain. Because the market rewards emotional neutrality. It rewards those who can act without attachment. When you reach that state, the market's randomness no longer feels threatening. It feels natural. You stop trying to force outcomes and start allowing them. You trade with the flow instead of against it. Controlling the mind doesn't mean being emotionless. It means being emotionally balanced. You can feel fear, but you don't feed it. You can feel excitement, but you don't chase it. You can feel disappointment, but you don't drown in it. You simply acknowledge the emotion, breathe through it, and return to your plan. That ability to feel everything yet remain unmoved is what defines a true professional. In time, trading becomes meditative. Each trade becomes a mirror of your awareness. You begin to recognize that the real reward isn't the money. It's the state of mind you cultivate. You start to value peace over profit, process over outcome, mastery over excitement. And ironically, when you reach that place of inner control, the profits begin to flow naturally, not because the market changes, but because you do. When you control your mind, the market loses its power over you. It can no longer intimidate you or seduce you. You no longer see it as an adversary, but as a reflection of your own discipline. You move from reacting to responding, from forcing to flowing, from chaos to clarity. That's the point where trading becomes effortless, not because it's easy, but because you've stopped fighting yourself. The market will always move in unpredictable ways, but when your mind is steady, every move becomes an opportunity. You no longer seek control outside yourself. You realize you've had it all along within. Control the mind and everything else falls into place. Control the mind and the charts stop being intimidating. They become information. Control the mind and you no longer need the market's validation. You already know who you are. The moment you master your own psychology, you no longer trade the market. You trade yourself, and that's the only trade that ever truly pays. Every trader dreams of big profits, the kind of wins that change a month, a year, maybe even a life. But what most traders never realize is that the path to those big moments doesn't come through force, luck, or aggression. It comes through discipline. Big profits are not born from big trades. They're born from small, consistent actions repeated with unwavering control. Small profits, when guided by discipline, become the true foundation of trading power. Most traders don't respect small wins. They dismiss them as insignificant, temporary, or unworthy of attention. They're constantly chasing the next big move, the perfect breakout, the one trade that will make everything worth it. But that chase is the very thing that keeps them stuck, because chasing is rooted in impatience, and impatience is the enemy of consistency. Every trader who has ever become great learned one simple truth: small profits are not the goal, they're the training ground. They're where discipline is born, tested, and refined. Discipline transforms a small profit from a random gain into a deliberate act of control. It's not about the amount, it's about the intention. Every time you take a small profit according to plan, you reinforce trust in your process. You prove to yourself that you can follow rules, manage risk, and let go of greed. That act, repeated enough times, becomes a psychological edge more powerful than any technical indicator. Because while markets change, human behavior doesn't. And the trader who controls their behavior controls their outcome. Small profits are like weights in the gym. On their own, they don't look impressive, but each repetition builds strength. Each small gain builds emotional muscle, the ability to act with discipline when emotions scream otherwise. You train yourself to execute the plan, not the impulse. You learn that consistency isn't built through intensity, it's built through repetition. When you focus on small, controlled wins, you are training the mind to value process over excitement. The amateur chases excitement. The professional seeks execution. The amateur asks, how much can I make? The professional asks, did I follow my rules? That single difference in focus creates two entirely different trajectories. The first burns out in a cycle of highs and lows. The second grows steadily, building confidence, control, and eventually capital. Discipline is the bridge between small wins and big success. It's the force that keeps you aligned when emotions try to pull you off course. Without it, even the best strategy fails. With it, even a simple setup can compound into power. Because trading isn't about maximizing profit. It's about minimizing error. Every undisciplined decision creates drag. Every disciplined decision compounds. Consider this. A trader who consistently earns small, controlled profits develops more power than a trader who occasionally lands big wins but often loses control. Why? Because the first trader has predictability, emotional balance, and control over risk. The second trader has volatility, not just in their equity curve, but in their state of mind. Big profits feel good, but they're useless if they're followed by emotional chaos that leads to big losses. True power comes from being in control of your behavior, not your results. Small profits build that control. They force you to operate within structure. They teach you patience. They help you internalize the rhythm of the market. Every small win is a reminder that you don't need to force the market. You just need to align with it. You begin to understand that success in trading is not about outsmarting the market, but about mastering yourself. Discipline gives meaning to small profits. Without discipline, they're random. With discipline, they're proof proof that your edge works, proof that your process holds up, proof that you can control yourself under pressure. Each time you close a trade according to plan, you're not just making money, you're programming your subconscious to trust structure. That trust becomes the foundation of emotional stability. The traders who fail are not the ones with bad strategies. They're the ones who can't execute consistently. They cut winners too early, hold losers too long, or risk too much on one trade. All of these are symptoms of undisciplined behavior. They are emotional reactions disguised as decisions. But discipline removes emotion from the equation. It replaces impulse with structure, fear with awareness, hope with acceptance. Discipline is not built in comfort, it's built in conflict. It's forged in the moments when your emotions tell you to act, but your plan tells you to wait. It's built when the market tempts you to overtrade and you resist. When you take your profit early, even though your mind whispers, maybe it'll go higher. When you take a small loss quickly instead of hoping it reverses, every time you choose discipline over impulse, you reclaim power. And that power compounds. It doesn't just improve your results, it transforms your relationship with the market. You stop seeing trading as a game of chance and start seeing it as a process of alignment. You stop chasing outcomes and start refining execution. You stop feeling like the market owes you something and start realizing that you owe yourself discipline. The irony of trading is that when you stop needing big profits, you start making them. Because when you no longer need to win, you trade without fear. You follow your plan effortlessly. You let small profits accumulate without interference. That accumulation over time becomes something extraordinary. It's not the size of any one trade that changes your trajectory. It's the consistency of your behavior. Every trader faces a critical turning point, the moment when they realize the market doesn't pay for excitement, it pays for discipline. The market rewards patience, structure, and emotional neutrality. It punishes impulsiveness, greed, and attachment. When you learn to treat small wins as sacred, you begin to embody the qualities that make big success inevitable. Think of small profits as proof of alignment. They confirm that you're in sync with the market's rhythm. They confirm that your edge is valid, that your discipline is intact. The trader who can collect small, steady wins without emotional disturbance is dangerous. Not because they're aggressive, but because they're consistent. They can scale without losing control. They can grow without gambling. Discipline gives you scalability. When you can execute the same way on a small account as you would on a large one, you've achieved mastery. You've eliminated emotional dependency. You no longer measure progress by dollars. You measure it by behavior. And when your behavior is consistent, scaling becomes natural. Because size doesn't amplify strategy, it amplifies psychology. If your psychology is undisciplined, size exposes it. But if your psychology is stable, size multiplies it. Small profits are the quiet builders of confidence. Each one tells you that your system works. Each one reinforces trust, and trust over time becomes emotional stability, the foundation of trading longevity. The trader who trusts themselves no longer forces trades. They wait. They act only when conditions align. That patience is power. It's not passive, it's controlled. Discipline also teaches detachment. When you can take a small profit and move on without regret, you've broken free from greed. When you can take a small loss and move on without frustration, you've broken free from fear. These are not just emotions, they are psychological traps that keep traders enslaved to outcomes. Discipline liberates you from those traps. It teaches you that your job is not to win, it's to execute. The power of small profits lies in what they represent. Mastery over self. Each one is a declaration that you've chosen structure over chaos, logic over impulse, process over emotion. The market respects that kind of energy. It rewards the trader who doesn't try to take from it, but who aligns with it. The impatient trader is always at war, with the market, with time, with themselves. The disciplined trader is always at peace. They understand that every small gain, no matter how insignificant it seems, is a step closer to mastery. They know that consistency compounds invisibly. What starts as small profits becomes momentum. What starts as control becomes power. In trading, the most dangerous moment is not when you're losing, it's when you start believing that discipline is optional. That's when greed takes over. That's when emotions start driving your decisions again. But the professional knows discipline is never optional. It's the only constant in a game built entirely on uncertainty. So the next time you take a small profit, don't dismiss it, celebrate it. because that profit represents control, it represents balance, it represents proof that you can follow a plan in a world designed to trigger your emotions. That's not small, it's massive. Over time, those small, disciplined actions become something unshakable. They build emotional resilience. They strengthen confidence. They create a deep sense of calm, even in chaos. That's the true definition of power. Not the ability to win big, but the ability to remain centered no matter what happens. Small profits don't just build capital, they build character. They refine the trader into someone who no longer depends on luck or emotion, but on self-mastery. And when you reach that point, when discipline becomes second nature, you realize something profound. It was never about the size of the profit. It was always about the size of your control. True mastery in trading isn't built on massive wins. It's built on disciplined consistency. Small profits, when guided by patience and emotional control, compound into something far greater than money. Unshakable confidence. Discipline turns ordinary trades into extraordinary growth because it transforms your mindset from chasing to executing, from forcing to flowing. When every small profit becomes a reflection of structure and self-control, success stops being luck. It becomes inevitable. In the end, power isn't measured by how much you make, but by how calmly, consistently, and consciously you trade.